You're cruising down an affluent street with celebrities, billionaires, and tech giants sharing boundary walls. The sun shines bright, and you're heading to an open house. It's time to make the leap to merge in with the ruling elite. You pull into the driveway of your potential forever home. It's the whole 9 yards, white picket fence, trimmed grass, oversized windows, and the perfect yard for your golden retriever to run wild. But as you step into the doorway, boom! There's mold on the walls. The light fixtures are broken. The floor is chipped, and there's a funky smell in the air. Now, if only your realtor had told you beforehand, you'd have been mentally prepared. Sure, the house needs changes before it turns into your perfect home. Still, the location, the neighbors, the weather, it's the American dream. So to save you from walking into a musty house without warning, we're taking it into our hands to guide you through the grueling risks of investing in real estate. Instead of dusts and pests, you'll be met with tough competition, legal work, economic changes, market devaluation, and much more. Stay tuned to save yourself the hassle of uninvited guests and be prepared for all the things coming your way as you embark on your real estate investment journey. Firstly, we can't stress this enough, but location is everything. Remember, people won't mind living in a less than ideal home in an excellent neighborhood compared to a mansion in a shady area. Finding the perfect location is your gold mine. But on the flip side, an area's demographic can change over time, and there isn't anything you can do about it. For example, a location once the epitome of the suburbs, bustling with families, a great school zone, and safe from crime, can turn into a rundown neighborhood as people move away to bigger and better opportunities. Remember that land is always categorized and divided into zones. Some might fall under a seismic zone, prone to earthquakes and natural disasters, while some might be dangerous due to proximity to industrial areas or toxic waste. Some areas are more humid, which could threaten construction and structural integrity, while some are prone to insect infestations. Be sure to risk evaluate the location you've chosen to invest in. If you're looking at rental property, think of your target market. Which zones would they avoid? Which areas would they picture themselves living in? While no one can accurately predict the future, there's a good chance of speculation to see which areas are bound to be developed, where infrastructure would make a difference, and the changes in demographic and popularity. So be sure to closely monitor these factors when choosing a location to invest in. Next up, if you're interested in rental properties, remember you're once again taking a significant risk, rather risks. Not only does the location rule apply to you, my friend, but bringing on tenants comes with a list of risks to consider. We don't mean to scare you off, but laying all the cards before you is best. Firstly, how you choose your tenants matters a lot. Are you targeting families, businesses, commercial property? You might face lesser or greater damage depending on who's renting out your property. Sometimes the tenants could be flaky with rent or break their lease, which means uncertainty in your following income. Similarly, there could be a dip in the rental market, so people might avoid renting homes. The demand might shift from rental homes to compact apartments, or people might be interested in purchasing a property. In such circumstances, there'd be no way you'd be able to make a profit on your rental property, so it's definitely a risk you want to consider beforehand. Now, rental properties can make you a lot of money too, if you keep strict rules and regulations, create an intricate contract that covers property damages and losses, and ensure there's an airtight lease agreement. You're going to be safe. Moving on, if you're one to buy and sell properties, there are a few drawbacks you should consider as well. Holding property long-term can churn a slow and steady profit, but if you're dealing daily, you can make little money. On a good day, you might be lucky to make some bank. Otherwise, there's a high risk of negative cash flow, meaning your return on investment is less than the money you initially invested. This is sometimes a good thing too. You can make enough money through other rental ventures or investments to compensate for the losses, or your real estate property picks up pace. Otherwise, a continued negative cash flow could leave you broke. Speaking of being broke, another risk you want to avoid is taking out loans or mortgages for investing in real estate. Lending a little money is fine, but taking out large amounts for property you aren't sure about is a recipe for disaster. Taking loans later on in your real estate career might make more sense. You'd be better settled and well-versed in the property realm, and most importantly, your bank account might allow it too. As a beginner, you want to mitigate your risks and losses. Initially, we suggest looking for a silent partner or a group of investors who might be willing to take a leap of faith with you. Even if you're short on cash, you can make up by putting in the elbow grease and learning the ropes of real estate investment. Finally, it's just as important to think of an exit plan. Just as quickly as you swoop in as a real estate agent to save the day, you must be able to leave with grace and a fair amount of profit. Even if you're thinking of a lifelong career in real estate, remember that it's a fickle market that relies on the economy, inflation, and the global market. You're always one recession or market crash away from being left without alternate options. At Optimal Wealth, we advocate for a diverse investment portfolio. Real estate certainly has its place in that mix. It can serve as a reliable income stream, supplementing your primary earnings, funding your lifestyle aspirations like vacation trips, high-end purchases, or further investment opportunities. The return from your real estate investments can also become a substantial part of your retirement nest egg. However, let's remember, as enticing as real estate can be, it shouldn't be your sole investment strategy. Diversification is the key to minimizing risk and ensuring a stable financial future. Balancing real estate with other forms of investment can provide you a safety net, even in times of real estate market fluctuations. Real estate might be tricky, but it's a lucrative opportunity once you learn to navigate through the fluff and get to the real deal. Nothing comes easy. It's all about trial and error. It's always a good idea to shadow fellow real estate agents and see which basket they put their eggs in. Sometimes other people's investments can also be a good learning experience to know where you should start. While there's no right or wrong investment, it depends on your goals. We hope you learn from our list of these few risks that you should consider before putting your money into real estate. Other than that, good luck and happy shopping. Let us know if you have further queries or concerns in the comments below. Stay tuned for more. See you in the next one.